Hello everyone, welcome back with another Sunday market breakdown. First of all, we will start with the DXY, the US dollar currency index. As you can see, we are currently at the monthly time frame. Now, as you can see, we shifted from a bearish bias to a bullish bias. We broke these last lower lows and currently are rallying up to this zone. If you go to the weekly, you can see price making higher highs, higher lows, higher highs, higher lows. Just like up, out is higher high, higher low, higher high, higher low, higher high, higher low, higher high. So if I take my Fibonacci and take it to this high, you can see the weekly take profit level is right at this level. So I think price has still room to go long and reach this selling region. Now, if you go to the daily, you can see that we can have an inverse head and shoulder. But shoulder 1, D head, and possible shoulder 2. We also have a clear break of structure of this. We have this impulse, relief, and now another impulse. We also have these two institutional candles, which we know are like magnets, so price will possibly come to this region and move up to the weekly TP. So now the first pair that I'm looking at the upcoming week is US dollar Japanese yen. As you can see on a monthly time frame, we have this bullish impulse with a very long relief and are currently breaking this descending channel. So before we broke this selling region, as you can see, and we tested this month the selling region to go long. The next selling region is at this level, so price has still room to go long. If you look at the weekly time frame, you can see as well price formed some small relief. We had this huge bullish impulse. Then price went correctively to this point and moved up. As you can see, price reacted on this inverse head and shoulder, right? Shoulder 1, T head, shoulder 2. What I like about this setup is that we have resistance in the head as well as a break of structure. Now, we also had last week's candle very bullish. So we know that the bulls are present. I'm also looking for more bullish price action. Going on to the daily time frame, you can see we actually have two patterns. We have this double bottom as you wish, but we also count this as shoulder 1, D head, and possible shoulder 2. I also like the fact that this week acts as resistance in our head. We also have a break of structure. Price broke the last lower high. Now, so I think price will go to this region for more upside momentum. At the 4-hour, we can see we are possibly making a 4-hour head and shoulder pattern. The only thing that I would say I'm scared of, but that can act against me, is this indication candle. So maybe price will go just to this region and then go up and not retrace all to this region. But if you look to the daily time frame, we are currently, this is a strong bullish buying region. Boom, resistance, 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 support, 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 resistance, support, resistance. But if I take my zone right here, where yes, right here, the 4-hour institutional candle is, you can see we only have resistance. Maybe here some bullish price action, but so I will take this so because we have here the most tabs as well. It's a more stronger buying region. This is my analysis for USD Japanese yen. The next I have is USD CAD. Yeah, USD CAD. As you can see, we are currently at this monthly buying region. Price has tapped this region and is making this bullish candle, monthly candle. Now we are at the last day of January, so 99% this candle will close like this. So we have a bullish M where price is making higher high, higher low, higher high, higher low, and possibly higher high. But we still are in the relief phase. We didn't broke this institutional candle yet. So this institutional candle is still holding the price down. That's only a con for me, but we can't ignore the fact that every time price went to this region, we went up, and we went up. Now on the weekly time frame, you can see we have an inverse head and shoulder. We have shoulder 1, T-head, and shoulder 2. You also see we have 2 rejection candles, and last week's candle close is very, very, very bullish. Now we also broke this high, as you can see. Ooh. And we stayed above this region with this candle. This was a false break, but here we went for a second time up and stayed here. So I'll count this as a confirmed break of structure. Now, if I take my Fib, price also reacted on this 78.6 Fibonacci level. We have a bullish indication candle, 2 rejection wicks, and a reversal pattern at a monthly/weekly buying region. So we can go to the daily time frame. Now at the daily time frame, you can clearly see we went from a bearish market to now bullish market. We broke the last lower high. We have this double bottom as well, and now this candle, you can see is right. Oh, yeah, you know what I mean, is an institutional candle. Now I would like to price make go a little bit higher so that our golden zones, the 61.8 and the 78.6, is more aligning with the institutional candle. But for now, I think price will come to this region before going long, because we have our reversal. We have on a weekly a reversal pattern in the form of an inverse head and shoulder. On a daily, we have a reversal indication about this double bottom, followed by a continuation pattern. Actually 2, 1, 2, 3, 4, 5, and also now 1, 2, 3, 4, and possibly 5. So yeah, this is my second pair. My third pair is Australian, yeah, and also my last pair is Aussie Swiss. As you can see on a monthly time frame, we are currently making low lows, lower high, lower low, lower low, lower high, but we are currently, this is the last, we have this impulse, small impulse. Now we still didn't break this low right here. So everything that is this low and this high, we will count as relief for more upside momentum. But if you will see, we are here at buying region. On the other hand, we already reacted on this selling region right here. Now on a weekly, you can see that price consolidated, also rejected 1, 2, 3, 4, 5, 6 weeks this level and stayed below this level. This means something, right? So we do have already tapped the Fibonacci zones for more upside momentum, but on the other hand, this isn't, or let me repeat, the Fibonacci is an indication. Now, what is price telling us? We broke this. We went impulsive to the downside, relief, counter to the trend, boom, another bearish impulse. Now price went up, rejected this region, the selling region, resistance, support, resistance, support, false break, and now also as resistance. So I think price can go much lower. You can see this. We have a continuation pattern in form of lower high, lower low, lower high, and possible lower low. You can also count this as inverse shoulder 1, the head, shoulder 2. So now if we go to the daily time frame, you can see prices made an inverse head and shoulder pattern. We had shoulder 1, the head, shoulder 2. We completed it right here, and now we have a continuation pattern after a reversal. Shoulder, this low, lower low, lower high, lower low, lower high, and possible lower low. Now we didn't receive a bullish indication candle right here. So if the bulls are really present, I would like to see some bullish indication candle or a possible 4-hour pattern to let me know that the bulls are active. If not, I'm more confident to take this bearish trade, the short trade. Now we already grabbed liquidity from this selling zone, which is this. I will forecast daily take profit level, the 64450. Now if we look to the 4-hour time frame, we have another pattern, the form of, we had like this first and second time, also like on the weekly, daily, and now also on the 4-hour. So it's a third time actually. Shoulder 1, the head, and shoulder 2. Yes, we had a fake out to grab more liquidity to go to the downside, and now a possible lower low, lower high, lower low, lower low, lower high, excuse me, and a possible lower low. Now I would like to see price reacting on this institutional candle, so we will go short. Thank you guys for watching, and I hope you have a great trading week. Bye bye.